I mean, over the last 48 hours, the 3-day rally of very good performance has now been broken. What's driving this?
Well, we have to look at the way the market sentiment has been with regards to the festive season, or rather the holiday season here in Kenya. And you notice there's been a slight selling, or rather major selling, by most what we would call short-term investors, or the others that you'd call the domestic investors, who are now selling part, in other words, to take up profit with regards to their shares.
All right, now we also know that despite this being a bit of a lull, a holiday season, foreigners are coming back into the market. They've been driving up volumes, for instance, accounting for about 43% of turnover in the domestic market. Why are they coming back? Is that a sign of good confidence?
It is. It's a very big sign of confidence. Like I spoke last week with regards to the key steps that have been taken in place. One, there's been a constitutional dispensation that was passed overwhelmingly. Two, there's the government in terms of the projects that are going forward. You find that there's a lot of infrastructure projects that are going on. You notice today there was a launch of the there's an infrastructure bond, and going forward there's also, in terms of profit taking, most of the financial institutions have been giving very good returns on investment. So these are proving to be very rich takings as far as foreign investors are concerned.
All right. Huge volumes traded for Safaricom this week, 97% bought by foreign buyers. But of course, we're starting to see some rivalry between Zain and Safaricom on pricing issues. Zain cutting its prices to very low levels. Safaricom complaining about the spirit of goodwill, as it were, in terms of how that could affect the sustainability of prices in the telecom sector. How is all of this going to influence the stock and the perception of Safaricom going forward?
Well, you have to understand that a healthy market is where there is competition. Without competition, you'll have monopolistic tendencies. With the slashing of the interconnectivity fees, you notice that now Zain, being the other competitor, has been able to slash its call rates from as low as from a high of about 6 shillings to 3 shillings, which also has triggered what we so-called a price war. But we also have to look at it from the point of view of voice data. As far as voice data is concerned, the lion's share still belongs to Safaricom at about 75%. So more or less what the 75 to 78, what they'll be losing out maybe would be now the termination charges, because most calls now may be originating from Zain on the other direction. But going forward, looking at Safaricom, its key strategy has moved from voice to more of data. And they've been focusing on building the data to try and make as much as possible in terms of bridging the gap, because they know that going forward they'll not be in a position to compete effectively with the likes of Zain, because their parent company, Bati, being one of the 5th largest mobile companies in the world, has a bigger purse string, so to speak.
All right, let's talk about Access Kenya. They released their half-year results this week, and we note declines of about 55% in pre-tax profits. They've explained it as a consequence of heavy capex expenditure in trying to boost their fiber optic network, and also some problems in trying to, the strategy of trying to focus on the internet solutions element of their business. Going forward, they'll be spending less, focusing on sales. So what do you see coming out of Access Kenya, especially the relationship that Access Kenya has with both Zain and Safaricom as an IT solutions provider?
Well, Access Kenya is in a prime position to be taken over, so to speak, because they already have the infrastructure. They are a lucrative company, they have the systems, and now going forward, because data is the next big market as far as mobile telephony or telecommunications is concerned, would look at the likes of either Zain or Safaricom looking at partnering with Access Kenya to take advantage of its well-established fiber optic network. But then again, irrespective if that may not happen, their strategy still is not to sit back and wait for a potential suitor. They already have the infrastructure. Now it's a matter of marketing it to be able to return on investment of what they've laid down already.
All right, some of the other stocks to watch out for this week and today was NIC Bank, gaining about 2% today, and they've showed a 53% increase in pre-tax profits. What's pushed the stock up? What is it about their earnings that impressed investors?
You see, NIC has a very solid base as far as asset finance is concerned. 2, sound management, and 3, in terms of being a traditional bank, they're very, very creative when it comes to tapping into niche markets. They tapped into the niche market of dealing with the youth. They tapped into the niche market of dealing with a certain age group, that is the middle income, and they also tapped into dealing with what they call the older generation. So with that kind of approach, the management has also helped them go forward. They've been here for more than almost 50 years, but their strategy has not changed to a certain extent, and that is helping them go forward in the sense of that they are as profitable as most of the big banks. All
right, earlier on in today's trade, some of the losers, Waiyaki, Standard Chartered and Centum. Why is that?
Yes. Well, I'd say Standard Chartered is more to do with just profit taking, because you notice there is a rights issue that they've already offered the rights issue. Then looking at Centum, we know the woes that more or less is just, like I said, a bit of profit taking tends to happen within this period, and those are some of the stocks when they appreciate a bit, a lot of people sell, and also to at least make some money for use given the period that we are in right now.
All right, and a final question, the state of the shilling. I mean, it's now somewhere in the region of 81 shillings 20, and people are saying it could get weaker than that. We know that it's a function of dollar weakness, and that the shilling tending to track the euro is just responding to global forces. But what impact is that going to have on the economy and on exports, which drive the Kenyan economy? Essentially.
Yeah, you notice now that the shilling is selling a bit short. We know the dollar in terms of they've given it more or less between 81.50 and 80.50. That may not be too much of a big deal, because looking also at, there's a lot of, the interest rates are low as far as the T-bills are concerned, so that also has a net effect on the same. But we're looking at a temporary situation whereby, yes, it may look like it's weakening for now, but going forward, over time when the market starts to respond more positively, we may look at it at least barely touching the 79 mark. But for now, we'll be playing with about the 80.50 to 81 at the most.